All righty. Good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's doing well today. Let me grab this really quick. Just I need to throw out the link. Just let everybody know that we're getting started here. Sorry, I'm running just a minute late. You know, it's interesting. The timing of my my dogs is so it's like amazing. Okay, so anyway, this is this is the bias chart. Sorry, it's like just as I go to start the webinar, literally the timing of my dogs couldn't even be worse. They come down and they're like, "Hey, we need to go out to the bathroom right now." It's like, great, you know, because no one else is awake here, at least for a few more hours where I'm at. So at least for a couple more hours anyway. So I was looking at this New Zealand Canadian because I had somebody reach out to me regarding this particular chart, looking for it to continue lower in a risk positive environment. And I was like, huh, okay. You know, I saw that as a little false breakdown in the New Zealand Canadian. And, you know, I would be more concerned if you break back above this resistance is what I was thinking, you know, but right now we are in a downtrend. So, you know, I see reversal potential. This other trader that I had traded with in the past, he's looking for a continuation lower because stocks are at all-time highs. So it was just it was interesting because we were just having a little bit of back and forth. His comments were that he thinks he could see other central bank convergence and eventually RBNZ doing more than the Bank of Canada. Wait, no. He thinks that he thinks positioning seems to be short New Zealand Canadian. So, yeah, he's actually thinking a reversal here too. All right, so you know, this is just something that again, I was having a conversation with another trader. He trades as a portfolio manager. So out in Chicago, North Carolina, shit, I can't remember. Craig says, "Hey, I see it above this trend line here," and I think that's probably what you're looking at. Yeah, I mean, I think there's a risk that we move from here to here. Whoops. Personally, you know, what happens, you know, once we get above here is, you know, we'll see. But I think it's trying to make a move. And you guys know how I feel about crude oil right now. I feel crude is pretty bearish. So, well, not bearish. Let me take that back. I feel that crude may have topped out near term. So for that reason, I would be looking for dips to buy here. So as you can see, I set up a little bit of an alarm. So if we can get a little, you know, pull back towards this, you know, maybe 86.80 area, maybe 86.70, I wouldn't mind taking a long down here personally. You know, because I'm thinking about it more from a crude perspective. He was thinking about it more from a central bank perspective, but you know, anyway, just some food for thought before we go through our major analysis. So, Craig, thanks for your comments. I appreciate that. Let's go into the charts, okay? And let's start off with the euro dollar. So the euro looks like we're still bear flagging. It does. The 38% retracement is capping. So that means this, you know, previous support, that spike high, it's all very important. I mean, we should stay below, at this point in time, below 1980. So, and I'll say, whoops. And I'll say while we're below 119.80, we have to remain bearish because it is a bear flag. I'm worried about if we break down, how much downside will we have. That's to be seen. See, if we do this, and I want to just show you this chart. This is kind of what I was looking at last night. If we have a bear flag pattern and it eventually breaks down, then that takes us closer to this trend line down here, right? If we completed that move. I just don't know if that's gonna happen. I'm thinking it's gonna happen. I just don't know if it's gonna happen. I don't know if it's gonna break through that support. I think the flag is setting up really nicely though. So where's our breakdown point for the euro? The breakdown point in the euro is at 119. So I'm going to put an asterisk here because if we break through that, I think the bear flag is on its way. Okay. Sterling. So the pound's, it has gotten some relief. It's really hovering above the 38% retracement, but I think we should write down this low right here, because it'd be one thing if you're talking about the sterling, we break down through this support and you know, you're like, oh, it's the 618, and then it just tags that horizontal support and then bounces. So I mean, I think this 138.60 level is going to be really important. And I don't think we're going to make it to 140 again, but I'm just going to have to ride it. And I think this is going to be big resistance. Okay. Aussie, like the euro, I think is just flagging. The Aussie hit new highs and then reversed. Notice we're not even hitting the yesterday's highs, which comes in at 76. I think that was the resistance we wrote down yesterday. I think it's going to be really important today. We could actually go even adjust it to a little higher. I mean, the 618 is 76 and a quarter. So I guess we should write both numbers down. So 76, which held yesterday, and maybe we might be able to get up to 76 and a quarter. But remember, I'm bearish because we came out of this triangle. And so eventually I feel that this flag here will be broken. So that comes in right now at that high. Let's call it 75.40. Okay. Kiwi. Notice we're just probing up against 38% retracement. It could get all the way back up here. I mean, it could. And there's a spike high right there. I mean, there's a lot of resistance up here. I'm going to write down 71 cents just in case we spike up there, right? Just in case. And it's funny, I actually want to keep the Aussie as a bearish move, and the Kiwi I'm just a little bit more worried about. So this is a 4-hour chart, right? So that spike high, that spike low, it comes in around, let's call it 70 and a quarter, which is also this trend line. So that's going to be support today. And wow, look at the loonie spiking up. What the hell is going on with the loonie? Damn it, this New Zealand Canadian is going to take off without me. Is it? Huh. All right. Oh, can't deal with it right at this moment. Dollar Canadian. So if we get above this 73, I think this I think yesterday we wrote 73.25, and I think we need to write the same number today. Or 123.25. Sorry, 123.25. And should that break, then next resistance will be 23.50. I still think this is bullish, and I have to say that these pullbacks have been very shallow for the dollar Canadian. Coming out of this base, 122.50 should hold as support. I know we went as low today as 122.80, which we said yesterday, we said this is the support zone, right? We just dipped below it. So possibly we could get down to 122.50, but I'm going to write down right now 122.80 seems to be pretty decent support at the moment, right? Swissy. So the Swissy has been, I think, has held up really well. This is a pennant, and notice how well it's holding up. I mean, when Steve was talking about, Steve was talking about the dollar, and it looks like it's just corrective. I mean, you look at currencies you look at pairs like the Swissy, and it's like, man, I feel it too. It's these. I keep expecting a dip back towards 91 cents, and this is not doing it. Resistance right now is going to be 92.40. I think we have to keep this one in bullish right now. Talking about a shallow pullback. I mean, we tried dipping below 91.60. I mean, 91.50 looks to be support right now. Okay, equities are going to open in 2 minutes. And you know what's going to happen in 2 minutes? Stocks are going to rally, right? Here's the US dollar Norwegian krona. I need to adjust this. We have to get above 8.56. Before we can head back to 8.70, which I think is key. Support 8.48 continues to hold for now. I think it's bullish, but we really have to wait until we get above that 200-day moving average, which is 8.70, before we can really make a move. So the dollar Mexican peso stopped me out overnight. I had my stops below, this trend line here actually, and it stopped me out just as I was waking up this morning, and it's trading heavy. I thought we would actually find some support here, but obviously with the S&P at all-time highs as I'm speaking, as you would expect, we're going ripping into all-time highs as the market opens. There we go. It's going to keep the dollar Mexican peso pressured. We are finding support near term at the 618. I told the guys in the chat room that, you know, if we dip below 20, I'm probably going to stick my toe in again because of the 618 retracement, because it's a big, big figure. That was my plan, but I'm going to put it back at range for now. I mean, this has been a really big correction. So now any move back up towards 2030, once again, you know, that's going to be resistance. Dollar yen really struggling at this resistance. We did hit the 127% extension and we held. So, you know, how many times have we referenced the 113 level, or we called it, I think, 111.15. I think we referenced that a lot, right? I'm going to keep it in range for now. Support's going to be 110.25. $110.30 actually. It's going to be these spike highs up here. Wait, stocks are open. S&P's up 0.25% or 0.5%. Let's see what happens here. Okay, while we're on the S&P, let's just, this is not correct. That's correct. This is not correct. So next resistance is at 4,300, as you guys know. And that's where we should be heading next. It's hard to see this, you know, the dollar really strengthening here with stocks just continuing higher. Support will be right here, and this is going to be pretty key. I mean, you can see all of these lows here. These hourly, well, actually, let's make it just a little lower, right? It's really through here. So while we're above 42.40, we definitely got to stay bullish while we're above there. Now, if we broke through there, then we're going to have to open up some downside supports. I just, you know, again, look at what stocks are doing. They just cream higher. NASDAQ catching up. Dow higher. What's not to love? Dollar index, let's go ahead and do that. I mean, the dollar index is simply just waiting for the stock market. It's like the dollar index knows, hey, you flash me some selling, and then the dollar index may give it a go. And so that resistance right now is 91.90. Support is going to be 91.50, 91.30. So $91.30, $91.50, and then resistance $91.90. And this chart is holding up really well, right? It is. The dollar index is holding up really well. We'll have to keep it in bullish for now. Gold, trading heavy. As we've been noting, 1,800 1760. Nothing's changed here. This, or did we write 1755? I think it was 1755. And 1800. While we're below there, we have to remain bearish. Silver. So that spike low, 2650, right? 2550. I'm sorry, 2660. Is it? Shoot, hold on. 2550. $26.50. That's what we had written yesterday, I think. Bitcoin, as you guys know, 30,000. I will write down once again at the 36.5 level. 30K, right? 36,500. This is bearish. Shorting rallies in Bitcoin is, I think, logical still. All right, guys. NASDAQ is breaking out. Dow
Blake,
is breaking out.
Can you show the bias chart again, please? I missed it. Sorry about that.
Sure thing. S&P is breaking out. Stocks continue higher. We should, I think we should see 4,300 in the S&P today. How about them Snapples?
Let's open the champagnes. Pop the champagnes.
Let's do it. Hey, guys, I'm going to let you take over. I've got 10 to, the animals are very restless over here. So I'm going to let you guys take over. Stocks are rallying. Dollar should stay weak. I'll see you guys on the daily roundup.
Thank you.
Bye-bye, mate.
Thanks, guys.
Let me just paste this onto the chat and we are ready. Done.
Ready, steady, go.
Ready, steady, go. Do we see 4,300 today? Maybe. Maybe.
Why not?
Man. As long as yields are not doing anything, I don't see what's going to change things. And I hate saying it, but that's what I think will happen.
Yeah, yields still in hibernation within this corrective channel. I think we're eventually going higher, but you know, we've already spent, how much has it been? Since the middle of March, we've been stuck here. So it's now more than 3 months that we've been stuck in this tight channel. So who knows? I mean, there's no guarantee that, you know, we're in summer, so who knows? This might extend even further, right?
Absolutely. And summer markets, you know, they're quiet. So it's, you know, low liquidity. What happens in low liquidity? Usually just a grind higher.
Yes, usually that's the case. And if that's what happens, I doubt it that we can see a much you know, stronger dollar. But until we resume the downtrend of the dollar, I still believe we're probably you know, missing one leg of upside. Now I don't know exactly what the catalyst is going to be for that. But it doesn't really matter. When the market wants to do something, the market, you know, finds an excuse to do something, as it did with the recent FOMC statement. I mean, there was nothing really hawkish with the recent FOMC statement or with Powell's press conference, but still, you know, the market did what it wanted to do, which was, you know, get rid of the weak hands, so on and so forth. In any case, I'm seeing this this rebound in several pairs against the dollar. To be really running out of steam. The euro is a good example. We've talked about that in the previous days. The cable is a very good example. And actually today we're going to have a better look at the pound pairs in shorter term time frames in the 4-hour chart, to be exact. Equities just pushing the highs completely, ignoring what happened last week. Nasdaq is at all-time highs. S&P is currently at all-time highs. IWM is not at all-time highs. It's still consolidating in the triangle. And the Dow Jones is also not at all-time highs. It's probably consolidating in what looks like it can actually be a flag, right? There it is. So, even the IWM and the Dow Jones that for the time being are diverging are probably in, some form of corrective consolidation, which should eventually break higher. We've said that about the IWM. Now we have a better technical view of what might be happening in the Dow Jones. So same deal. I think we are probably going to be seeing new highs there as well, sooner rather than later. Let's also fib extend this. Yeah, and now we get a better idea. So, Stelio, after what was the book? Was it Dow 35,000?
Oh, I don't remember. Was it 35 or 45? I don't remember. But you know what? The thing is, it makes sense what's happening. All major central banks.
36,000.
36,000. There you go.
Yeah.
What's
so
happening?
We're very, very close.
We're very close.
Yeah. If indeed this is a corrective consolidation, which probably most likely it is, I think next leg we finally fulfill that prognosis. The only problem being that was meant to happen, like what was it, 30 years ago or so.
Yeah, we've had a few drawdowns since then.
Yeah, so there was a little bit of a delayed fulfillment of the prophecy, right?
But the problem now is that, and I understand why markets are buying the dip. Every major government, right? Every major government, they're creating deficits every year, right? And there's no way this can be reversed. I remember in the US, there were, when was it? During Clinton's couple of years, there was a 1 year where they basically had a tiny surplus. Anyway, I don't remember.
A fake surplus, but a surplus nevertheless.
Yes,
I'm calling it fake because I remind you there is this cancerous approach of the off-budget items that for some reason don't count in the deficit, although the vast majority of them statistically can be predicted, but still they refuse to add it in the budget. And now we've gotten to the ridiculous point that like 40% of the deficit is off-budget items, but it still keeps repeating itself every year. Yeah. But yes, I mean, the fiscal position of the US was...
The main point is that there's never going to be surpluses again. I mean, at least not consistently. So what does that mean? More debt, more creation of money, and higher asset prices. End of story. And if you're an investor who looks 20, 30 years in the future, you want to save something for your kids or your grandkids, you just buy the indices and turn off your computer and forget about it, right? There's going to be ups and downs, but eventually inflation only is going to drive everything higher. So people are probably saying, this is going higher, might as well just get long and forget about it. But anyway, they're going to be drawdowns, that's for sure. But
that's why we've also seen this shift since years ago from active managing funds to passive funds, so on and so forth, because more or less value investing has died. Of course, I don't believe that this is going to be a forever thing. There's going to come the day that we're going to say, yeah, that was inevitable. And, financial reporters are going to be wondering, like, how the hell did this happen? Nobody could have seen it coming. But of course, everybody with half a brain can see what's going to eventually happen. But until that happens, people are losing their patience, right? As you said, they want to make a return in this lifetime, not the next one.
Exactly.
Yeah.
Exactly. Yeah. So unless, like we said before, unless the yields start rising and something changes, I don't see what's going to stop these equity markets.
Yep,
End of
I
story.
totally agree with you. Anything else we have, Stelio, to talk about? I mean, before we go into the
Not
technical
really.
part of
We had the numbers out of the US a little bit weaker than expected. We have Bank of Mexico later today. Again, no surprises expected there. So nothing really to mention. Cryptos is something I'm still looking at. I'm not trading them, but they will affect other markets now. So, and if you look at Bitcoin, obviously we broke below, what was it, 30,000, yeah, and now we've jumped back up again. Crypto fans are
Ethereum, by the
celebrating.
way, is riding the 200 DMA. This seems
Yeah.
to be holding for now. But as I said yesterday and the day before yesterday, when we had the initial rebound, and I haven't changed my mind. I very much doubt that this incremental new low is going to be enough to fulfill the market's will. I think the market will really want to send some people to the woodshed before it can actually move higher. So I'm still of the opinion that we might see this rebound move higher, especially since some people are going to be um, uh, looking at the chart and seeing what they want to be seeing, a false breakdown. So some of them are going to be becoming a little bit more courageous and buying up some more or buying into it. But I think that this market is not done with its downside. I think there's more to come.
I agree, and the whole move of the last few days, it feels a little bit, very corrective, and it just seems to be
It's weak.
consolidating before. Yeah, exactly. It's weak. It's consolidating before the next move, which I think is most likely continuation lower. But let's see. But no, otherwise, I don't really have much else to say. It's we've covered pretty much everything.
Yeah, same with gold and silver. Recent consolidation, very weak.
Yes, it looks weak. Yeah.
Yeah, so I don't think we're done. I don't think we're done. I think there is more downside here as well, of course, at a totally different extent than what I'm expecting to happen in in cryptos. I mean, totally different extent. So yeah, silver gold should see more downside. I think we should easily see silver back to 24 and a half, even lower. I think we should easily see gold down to 1750 and probably lower than that, most probably lower than that. Now, um, somebody that wants to jump the gun can easily say like, oh, look at yesterday's candlestick in crude oil. We tagged the 161.8% fib perfectly. And then we paired back the gains. We closed almost unchanged on the day, slightly positive. So this might have been the high, and yeah, it might as well been. I mean, I could easily say, yeah, this is the high, and start patting myself on the back because I had this target for a long time ago. But that doesn't change the fact that I need to caution people, because yes, that was an ideal target being hit, but 24 hours of a little bit of weakness is definitely not enough to um, declare crude being dead and moving much lower. So it might have found a high, but I think we need to see more evidence of something like that happening. And trust me, if crude has found a high, or if crude ends up finding a high anywhere here, which is likely it's going to find a high somewhere there, don't worry about it. There's going to be a very decent amount of downside you can capture without having to take um, big risks in trying to front run a move that you don't have evidence that it has started yet, right? So keep that in mind. Now, natural gas, as I said yesterday, might have actually found a short-term low over there, a break above 339, the previous high. I think targets 370 and 410 equivalently as the two upside targets. So keep that in mind. I think natural gas looks very healthy and might be doing very well even if crude decides to pullback, so keep that in mind. They're not necessarily correlated as much as you think. We've seen many occasions that they can even move in the opposite direction. So I don't think your decisions about natural gas should be influenced by what you think is going to happen in crude, not necessarily. What else? Yeah, I think that's it more or less. Now, I wanted to have a look at the pound, some of the pound crosses on a shorter term chart, on the 4-hour chart specifically, because here's the cable, right? And as you see, there is quite a nice bearish interpretation in what's happening here. This might have been a pennant. We found a high somewhere in between the 38.2 and the 50% fib in this horizontal support resistance area, to be exact. And we might have already started a new move lower, so keep that in mind. Here is the pound yen that got rejected from this trend line resistance, so keep that in mind. We might have put in another temporary lower low on this chart. Here is the pound Aussie with, let me put this in perspective. Let me take you for these two on the daily chart, pound Aussie and pound Kiwi. Look where we got rejected in the pound Aussie, right? Exactly. On top of this long-term ascending channel trend line resistance, confluencing with the previous high, the October 2020 high over there. So, quite a crucial level that we got a rejection from. And here's also the pound Kiwi, right? Pound Kiwi didn't exactly make it to the channel trend line resistance, but still, in my opinion, this channel higher is not impulsive. So I expected as my main thesis, and you've heard me say that before, an eventual rejection. So keep that in mind. Even if you look at other crosses, for example, look at the pound CAD. We might have already begun another leg lower in the pound CAD, right? So since the pound was a decent mover today, I wanted us to take a look at some of these charts in on the 4-hour time frame. Anyhow, that's it more or less what I had to say. So now it's up to you. What do you want us to have a look at? OPEC likely to increase production next week, maybe the trigger. Yes, Jane, it might be the trigger. Although, as I've said before, I think these type of events are usually the catalyst and the trigger, as you very well mentioned, and not the actual underlying reason. Because you remember that during the past few months, we've had that happen again, and crude oil couldn't care any less. It kept on moving higher. But yes, when something is fatigued, I mean, we are seeing now a trend that, in my opinion, looks technically fatigued. Yeah, this might prove to be the triggering factor for a change in behavior. I don't think it's going to be the real reason, but the triggering factor, it might as well be. I agree with you. Oil, it is good. Risk, what do you mean, mate? Sorry, I can't interpret it. I'm not sure how to interpret your comment. So if you want to restate it, let me have a look at the Kiwi yen and the CAD yen, as our friend Jason says, and then we can go to having a look at stocks. I see your requests having to do with stocks, mate. So having to do with the Kiwi yen, and actually, why not have a look at the Aussie yen as well? So having to do with the Kiwi yen, when we saw that breakdown the other day, I said that, listen, at some point, we're going to see a rebound and probably at least one more leg lower. The continuation lower was not as much as I envisioned. Doesn't really matter. The rebound has run a little bit more, but I think that my initial understanding of how this would move, meaning lower, somewhat of a rebound and lower again, I think might be on point, because I think there is a very good chance that this move higher might get rejected anywhere near where we are and see another leg lower. And if you look at the Aussie yen, same deal, right? Same deal. So I don't think that we've necessarily found a low in these crosses. I think there is a good chance that there is at least one more leg lower missing. So keep that in mind. Now, having to do with CAD yen, I was looking at it yesterday. It had a very strong rebound higher. There it is. But I still believe that there is a good chance that we're not done, and we might have something like this before we can resume higher, right? So I don't think this is the area you should be looking to buy. Quite the opposite. Look at the RSI. We've had such a strong rebound, and the RSI was barely back above 50. So keep that in mind. Now, let's have a look at the stock complex and what our friend Amira wants to look at. I'm going to start with AMD, and you see why. So here is AMD. I even went some time ago when we had a look at it into the fundamental picture of what's happening with AMD. We were back there. I said that we might see another leg lower before higher, but the market had different plans, right? The market decided to consolidate more. Let's delete all that. To consolidate more in time, and I think AMD is probably breaking higher as we speak. There you go. So 38.2 seems to have been enough, and this tells you all you need to know. What does it tell you? That this is still a very, very strong market. I think we're breaking higher. There you go. FSLR. FSLR. You can't expect to see anything better here. Breaking out of a corrective consolidation with a gap higher. I mean, this is the type of signal you want to see in a breakout trade, right? No need for me to say anything more. Zim. Okay, last time we had a look at it, we were obviously back there. I said corrective move lower than higher. This has already happened, played out quite nicely. And I think that this is another bullish consolidation, most likely, which should get resolved to the upside in one of these two ways, most likely, right? So looks good. Looks very good, actually. Even the fact that after this parabolic move higher, we're just seeing a correction in time rather in price shows extreme strength here in this Zim integrated shipping services company. Anything else? Hey, Steve, can you look at AUTL? Sure, AUTL. AUTL. Okay, you want the good news or the bad news first? So, the good news is that this seems like a nice breakout after a very prolonged move lower that had everything you wanted to.
It looks a little bit weak as a breakout, though, right?
Yes, exactly. Yeah. Now you're jumping ahead to the bad news, Stelio.
Sorry.
So it had like RSI divergences, so on and so forth, took the form of a descending wedge. Despite taking all this time to retrace lower, it didn't even manage to go back to these lows, right? So we had a rather strong move higher, and the move lower took a long time, but didn't manage to produce new lows. Now, those are the good news if you want to be bullish. The bad news, as Stelios just mentioned, is, this is not an inspiring type of a breakout, right? And I'm not saying that it can't extend further. I mean, sometimes these things start slowly and accelerate later, but still, that's not what you ideally want to see. So, yeah, be careful here. Be careful. I mean, I understand why you would want to be long, perhaps, but I think you need to, be very, very conservative with, your risk, because we're still talking about a stock that peaked in 2018, and from there to where we currently are has lost 80% of its value. No, that's a lie. More than 80% of its value, like 85% of its value. Right. So, yeah, be very, very careful if you want to capture some upside here, because we're still talking about something that imploded some time ago and hasn't really reversed the downtrend. Right. REGN. REGN. Yeah, say, it's a totally different situation in what we're seeing here. It has some similarities with what we saw before. It has no similarities having to do with the long-term picture, because the other thing was something that went very high and then imploded. The similarities are only in the shorter term, meaning we've broken out from a very nice corrective pattern, but look at the way we've been moving higher. Yeah, I don't know. Something tells me we're not done correcting lower. Or at the very least, we might need to do something like this before we actually see like a very constructive move higher, right? So yeah, I would be careful here also. Just pay attention to this channel. PLTR, is that Peloton?
Peloton, no, PTON is Palantir, isn't it? PLTR, yeah.
Yeah, higher. Go. Yeah, higher. I mean, it's higher. Yeah, I have nothing but to say. I mean, it's doing everything right for the time being. So keep looking higher. 2770 is the next upside target, by the way. Okay. Anything else? I've covered the questions I see. Anything else, guys, girls? Okay, there is a yes. What is it you want to look? Is that a SCDG? Okay, SCDG. Yeah, might have broken higher, but I would definitely want to see it close above the 200 daily moving average. You see it here, acting as resistance now, right? So yeah, we might have broken higher, but give it a little bit more space. Let's first close above the 200 daily moving average, and then we can be more confident about it. Net. Yeah, there's nothing I see here that's not bullish. Having said that, yeah, my cat agrees. Having said that, I'm a little bit worried here. There you go. Look at this. So we've reached the first target after breaking out from this triangle, which is the 127% extension. We're clearly overbought on the daily chart. So bottom line, what I'm trying to say here is the following. It's bullish, but should you be buying here? No, I don't think so. I think that I have no idea why you're asking, right? If you're asking because you're long, I wouldn't advocate that you get rid of your position. Everything is happening, as you would hope it would be happening here. if you're asking because you want to get long, no, this is not the place anymore to be buying, right? This is not the place anymore to be buying. If we see something like this, then yes, but not here, not right now. Hello, Gurkim. STNG.
That's Scorpio
What is,
Tankers. It's a
I thought it's Star Trek Next
the
Generation.
next generation. That's STTNG.
Yeah. Okay, we've seen it before and it's doing everything right. Last time we saw it, I obviously said that this looks like a bull flag that's going to break higher. It's breaking higher, keep looking higher. Where's the next target? Yeah, I would guess somewhere there, 27.5. So, yeah, everything unfolding as you would expect there. TMRC. Yeah, the good news is that it's trying to build a bottom, which if we break through is going to be a very, very bearish development. But, technically speaking, from a risk reward perspective, you can try your luck, right? There you go. But I have to tell you that, yeah, this is not really inspiring. If I had to bet, I would guess we have more downside to go. EVR. Okay, this is working nicely. Last time we had a look at it, I said this is an ascending wedge. Two potential outcomes. One, we break higher for one more high and then lower. The other one, we break lower from there and then eventually higher. We've broken lower. Now, I have to tell you that ideally, the target would be here. So ideally speaking, I would want to see a move back to 115 before we actually try to find the low. So keep looking lower for now, right? Keep looking lower for now. Let's also... Oops. Yeah, let's see. I think we have more to go. Hello guys, I just want to learn what is the necessary equipment for the setup, trading setup. What do you suggest? What do you mean trading setup, mate? My broker uses MetaTrader 5. MetaTrader 5 is a good platform, by the way. And I just use only smartphone. There is MetaTrader for smartphone. I'm sure about that. You can use the MetaTrader for your phone. There is a MetaTrader 4 and a MetaTrader 5 for phone. I might not understand your question right, but there's nothing wrong with using MetaTrader on your phone. Help me out if there's something else. Kerry, what you wrote is too long to be a ticker name, LLKKF. Was that something you wrote by mistake? SMH, by the way. Let's have a look at it. SMH still consolidating. So remain patient. Probably breaking higher eventually. You understand this? I mean, it's the most likely outcome, right? But we haven't broken out yet, so be a little bit more patient. So you do have MetaTrader 5, you mean, on your phone, and you want to upgrade to something else? I don't think, I don't think you'll find something better. I think it's fine. Using lots of monitors. Yeah, listen, personally, I can tell you that for many, many years, personally, what I'm doing is that I'm not using any of these platforms to plot my charts. And there is an extra reason I don't, because if you decide to change your broker at some point or change the platform you're trading on, you might lose all your drawings. So my personal suggestion, if you want to use multiple monitors, is use TradingView. You can have as many TradingView windows as you want, so one for each monitor. So do your drawings there and use your broker's platform just for execution of your trades. That's my personal suggestion. At least that's what I do, and I'm really happy with it. Snap. My pleasure. Snap. Ideally, I would have wanted to see one more leg lower here. That would be an ideal fulfillment of this technical picture. And it might still be the case. But, if we actually confirm the breakout today, then we might just have been in a triangle, right? Something like this. So, yeah, this breakout that we're seeing today invalidates, if confirmed, invalidates that outlook. And it's a bullish development that should point to new highs. 80.57 would be the first upside target at new highs. Let me have a look at it. Okay. We might have found a low here. There is a very good chance we found a low here. Nice three-wave move lower. A, B, C. I think this looks good. That's what I think is happening here. Yes, we can speak with them, Mark. We can speak with them because we know them personally. Blake knows the CEO, etc. So I can actually have an answer for you tomorrow about this. I can have Blake speak with him today.
I'm here. They Boris, they don't do that. They don't.
Oh, they don't do affiliate deals, Blake?
No, they don't.
Okay, there you go. You got your answer.
They have a product that they just don't, pretty high demand product. You know what I mean?
Yeah, very true. Although, if I remember, there is like a cheap subscription which offers what most traders need, right? I mean, the first tier of subscription, I think, is rather very logical in price, if I remember right. I know we have it for free, but I remember before we got it, I remember I had it privately, and I wasn't paying really much back then. I was paying something like, I don't know, five euros per month, but it's been years now, so I'm
I mean, there's different tiers, so it depends, how much saving you want to do, and there's different tier memberships. So
yeah, okay, thank you, Blake.
Mark, I'll reach back out. It's one of those things that's been on my to-do list to reach back out and see. We have a few big things that are happening over the next couple of weeks, and actually we'll probably revisit that topic because it has been a topic of conversation just a couple of weeks ago with internally. So just bear with us. We'll look at it because I think it'd be good for you guys. Yep.
Thank you. SPWR. Bearish. Yeah, doesn't look really good, right? Does it? This rebound is definitely not impulsive in nature for the time being. So, yeah, I don't think you should try to cut a falling knife. I know we've been recovering, but I don't see this recovery as, promising. Let me put it like that. Plug, same deal with plug. Somewhat better, but still, yeah, not looking good. Needs to do a lot more. And last but not least, and we have to wrap it up, guys and girls. Some time ago, Kerry asked about the Aussie. I'm assuming he meant the Aussie USD targets. Listen, we've already entered an area of support resistance here at 76 cents. So in my opinion, we are already at the first resistance area, right? I wouldn't be surprised at all to see the next leg lower within this larger correction starting from here, 76 cents, anywhere between 76 and 76.50. And if that's the case, the next downside target would be at 73.80, the 61.8 of the last leg higher. Okay. So see you again tomorrow. Bye bye.